Oil prices around the world soared after Saudi Arabia and other OPEC Plus nations surprised markets by announcing that they would voluntarily cut production even further this year. The U.S. quickly reacted by calling the move unadvisable, arguing the world needs lower oil prices to support economic growth. OPEC Plus had already slashed production by 2 million barrels through the year, but they hadn't been expected to take it further. Over the weekend, top OPEC producer Saudi Arabia said it would cut output by 500,000 barrels per day from May until the end of the year. The Energy Ministry said it was a bit to support stability of the oil market. OPEC ally Russia said it, too, would extend a voluntary cut of 500,000 barrels per day until the end of 2023. Moscow had first announced those cuts on its own in February, following the introduction of Western price caps. After that unilateral move, the U.S. had said Russia's alliance with other OPEC nations was weakening. Sunday's surprise announcement appears to show that cooperation is still strong. The United Arab Emirates, Kuwait, Iraq, Oman, and Algeria all said they would voluntarily cut output over the same time period. According to Reuters calculations, the latest pledges bring the total volume of cuts by OPEC Plus to 3.7 million barrels per day. That's about 4% of the world's demand for oil. As a result of Sunday's news, Goldman Sachs forecast a 7% jump in oil prices.
As the price of oil headed for its biggest daily rise in nearly a year, the White House on Monday confirmed it was given a heads up about the decision by OPEC Plus to cut oil production before the group shocked markets with its announcement a day earlier. White House National Security spokesman John Kirby said the U.S. told the Saudi-led group the cuts were ill-advised, adding that he couldn't even begin to speculate why the decision was made. OPEC Plus, the Organization of Petroleum Exporting Countries and its allies, including Russia, announced Sunday it was cutting output by more than 1 million barrels a day starting next month. That's in addition to the 2 million barrel a day cut the group announced in October, which continues at least through the end of the year. Word of the additional cuts sent oil prices soaring by more than 5% on Monday. Analysts and traders said the move by OPEC Plus could push oil prices towards $100 a barrel, setting the scene for another clash with the West grappling with higher interest rates. The decision also signals unity within OPEC Plus, despite Washington's pressure on its Gulf allies to weaken their ties with Moscow, while also undermining the West's efforts to limit Russia's oil income. Kirby on Monday said the White House is focused on consumers, not barrels, and will continue to work with producers to ensure lower prices at the pump. U.S. stocks ended mixed on Monday, with the S&P 500 getting a boost from energy stocks following the surprise decision by OPEC Plus to cut the group's oil output. The Dow climbed roughly 1%, the S&P gained about 0.4%, while the Nasdaq dropped roughly 0.25%. The move by OPEC Plus drove oil prices up more than 6% Monday for their biggest daily gain in nearly a year, and could push the price of oil toward $100 a barrel. That added to inflation worries, which could complicate the Federal Reserve's monetary tightening campaign, says Anna Rathbun, Chief Investment Officer at CBIZ Investment Advisory Services.
So the OPEC Plus decision to cut output of oil for more than 1 million barrels per day, that is in anticipation of a downturn that is perhaps spurred on by the Federal Reserve's decision to raise rates very quickly through last year and so far into this year. Now, the irony is that such action may be a self-fulfilling prophecy. So higher oil prices complicate the current issue of sticky inflation right now.
The unexpected cuts also caused the S&P 500 energy sector index to surge nearly 5%. Chevron, ExxonMobil, and Occidental Petroleum all rallied more than 4%. Shares of United Health Group rallied on better-than-proposed Medicare Advantage rates for 2024. And finally, shares of Tesla dropped more than 6% after the EV maker said March quarter deliveries rose just 4% from the previous quarter, even after CEO Elon Musk slashed car prices in January to boost demand.